Hey guys, good morning. Good morning. How's everybody doing on this awesome Friday morning? Hope everybody's doing well. Let me just get everything set up real quick, guys, and then we can get this stream started. Feel free to post on the comments any stocks you guys want to take a quick look at. But let me just post on socials that I am on right now. So let's see how the market is doing. I think I should be ready to go. Let me just Simply Wall Street. What else do I need? I think Simply Wall Street, um, TradingView, and Finviz. Yep, let's take a quick look at how the market is doing. And now let me share my screen. What's going on, Lisa? How's it going? Good morning. Good morning. So right off the bat, we can see, I mean, it definitely seems to be a red day right now. We have the Dow down 0.56. We have NASDAQ down 0.95. We have the S&P 500 down 0.79%. Pretty much all stocks seem to be on red in the red map. So it's definitely seems to be a nice red day. A few things happening in the market today. We can definitely take a quick look. But I just want to see if there's anything that might look interesting right now in a quick overview. Big tech is down. Microsoft, Adobe, right? We have some big players down. All the big players, Google, Facebook, Apple, Microsoft, even Amazon and Tesla are down right now. I see a lot of red here in the semiconductor industry. We have Qualcomm down about 3%. That one might be interesting at these levels. I definitely, I'm not going to overlook this one. Carvo CRVO is also down about 3.46%. In the software market, I want to see if there's anything right now. Nothing too interesting to grab my attention. But it definitely seems like it's even financials, right? Even the financials, MasterCard is down 1.4%. Visa is down 2%. PayPal is down 1.5%. Google and Facebook. I think Google and Facebook, even though these two are, I want to say, a bit high right now, I think next week might be for me a dollar cost averaging week for either Google or Facebook. These are ones I haven't added to recently, just because of price. But maybe right now might be time for me to dollar cost average a bit into them. So Lisa, you were just about to ask me about Qualcomm. We can definitely take a quick look. We'll jump right into that. Let me just finish seeing what's happening in the market right now. Let me see if anything interesting in my portfolio at the moment. So right now, real time, my portfolio, I have some green right now. Nothing too big, right? We have Redfin up, Apps is up, Upwork is up, Tattoo Chef, Fiverr, Magnite. But most of my big players are still kind of down. Unity is probably my only big player up, and it's about 0.07. So not too good. Definitely some red today in the market. We have C Limited down 2.2%, but it's still over $335. What's going on, Peter? Qualcomm interesting right now. Yeah, for sure. We see that one. We'll definitely take a quick look at that in a bit. And what's going on, Luis? How's everybody doing? So we definitely see a lot of the big players down. C Limited is down. Facebook, I'm really liking Facebook at these levels. I wouldn't say really liking it, but more of like dollar cost averaging time for me. Like Facebook and Google are ones I'm gonna have to think about this week for the upcoming week. We have PayPal down 1.7%. AMD is also down 1.6%. What else do we have? We have Shopify down 1.36%. CrowdStrike. So definitely a nice amount of volatility in the market. Is anybody picking up any shares of anything today? Or are people just waiting, holding back right now? So first, let's try to find out, what did you think about... I've seen it. I've seen parts of it. I haven't really watched it completely. The full thing. I mean, it was his first one, right? But still in early. I want to say still early for him to get any real feedback. But it's cool to see him do that podcast, Luis. Um, so let's see. What are we gonna take a quick look at today? So I really wanted to take a quick look at Qualcomm, right? Lisa and both Peter were talking about this stock. And the stock is down about 3.4%. And Luis, I didn't know who it was until you mentioned Eddie. How's it going, man? I thought you were back in school by now. But But here, what can we see? So Qualcomm, there's Qualcomm CEO on chips. We're short on everything. So it seems like the chip shortage is really hurting this company right now. Let's go to Benzinga real quick. I want to see what if there's any recent news. Let's take a quick look, and this is going to be Qcom. So Qcom right now. So I mean, it doesn't. I don't really see anything. Lisa, Peter, what do you guys? What's really happening with this? I don't see any major news right now, either from Bazinga. I don't think I can. Qualcomm. Let's see StockTwits. Maybe StockTwits. StockTwits usually share some stuff with us. Let's see if there's anything really moving the market right now. Yeah. So I mean, it doesn't seem. No, that's hashtags. Um, I'm back in school, but I have a free period, so might as well watch the best YouTube. That's good, man. And hopefully you start investing soon, man. Like we have a great community here. If you ever have any questions, feel free to just ask. So right now I'm taking a quick look at this stock that's down about 3%. There hasn't I haven't really seen anything. Lisa and Peter, do you guys have any information right now what's happening with Qualcomm? It seems to just be volatility moving the market, and right now the semiconductor industry with the chip shortage still being affected. Right, so that's definitely. Hi, Jose. Is Celsius and Stone a good buy right now? To be honest, Kenneth, let me say I do have both Celsius and Stone. Celsius is one of those companies that I believe there has never been a true buying opportunity. Right, this is a company that keeps just kind of going up. Very limited does it have kind of these pullbacks where it sits next to its medium-term moving average. And Celsius, I mean, most of the time, so you can see it's overextended. I think right now, even though I am a shareholder of Celsius, Kenneth, stock price can continue to go up, but this is one that I believe the valuation might be a bit somewhat insane, not insane, but a bit overextended at these levels where there is a chance of a higher pullback. The real question is, when is that pullback gonna happen? And if so, and if so, the real question is, when's that pullback and how much of a pullback? So for me, Celsius right now, it's at levels where it's more like dollar cost averaging small positions and not really building up a big position. But I still like Celsius in the forms of growth. Valuation is definitely the biggest yellow flag in my opinion for it, Kenneth. If we take a look at Stone, Stone is a little bit different. I know their recent earnings weren't what many analysts expected. I haven't really looked at it in too much depth to see how bad, if earnings were really that horrible. But in forms of technicals, if I was still bullish in Stone, this would definitely be levels I wouldn't mind adding on to, Kenneth. Right now in the fintech market, though, this just might be me. PaySafe is my go-to right now. This is the one I'm really liking at these levels. I actually, again, I'm not a rich guy, so I only put as much as I can on a weekly basis. But PaySafe is is the one I added to today. So PaySafe and Shopify were the two stocks I added to this week. Those were 2 out of the 4 that I mentioned on my video on Sunday. So PaySafe, if I was looking into a company right now in the fintech market, Kenneth, it would have to be this one, PaySafe. This is one I'm really adding into my positions, and I think I've added at these levels numerous times already. Obviously, this is not advice. It's just where I think this company can go in the future. So I like this compared to most of the other fintechs in both of growth and in forms of valuation. Hey, Jose, how long have you invested in stocks? So, Luis, I think my first investment was when I was 21 years old. I am 29 now. So about 8 years. And throughout those 8 years, I made a lot of mistakes. I recently got married. I recently got a house. So the account I show on YouTube here, this YouTube account is a little bit over 6 figures. And this one I started over in 2019. So in late of 2019, I believe. So November of 2019 was when I started this account. and it's my main account. It's the one I've just been driving. So multiple years of experience, but my YouTube account, my account that I have right now, is probably only since October of 2019. But definitely been doing this for a long time. So Peter was gonna. I would say that it's mainly the whole chip industry right now. Qualcomm seems to be affected more. Couldn't find reasons either, but might present good buying opportunities. Yes, let's take a quick look at Qualcomm. I know both you and Lisa were talking about it. What's going on, Zach? Ali, what can I do with Alibaba if I have shares at double the current price? Ali, we'll talk about that in a bit. Obviously, not advice. But I'll just share what some of my thought process would be. Mazda, what's going on, Mazda? DNA is now trading. Hard to keep up with the change of the ticker. I haven't really followed DNA. Is that a recent spec on Mazda? Lisa, I was looking at CG too. Is that Zillow Group? Zillow Group, Lisa. Wall Street will be adding more to Twilio, Roku, and more soon today. Good prices. I really like those picks. I added a Twilio and Roku, I believe, last week for me, Wall Street. I'm pretty sure they gave you better buying opportunities this week. Zoom is definitely looking interesting in these prices. At these prices, but when I'm not looking into right now, right? Wall Street and Mazda, yes, back DNA, okay. Yeah, I haven't really followed. I'm guessing it's gonna be in the geonomics geonomics market. That's definitely not a market I follow. Maybe one I gotta start reading. Baldwin, what's going on? What about Stone? Yeah, so I thought I just talked about Stone. So Stone, I haven't really looked at their earnings, at their recent earnings, to see if the growth kind of slowed down or what's happening to really determine the stock price. If I was bullish in Stone, these would be the levels. I wouldn't mind adding a nice base level, but like I mentioned, for me in the fintech market, even though I own Stone, PaySafe is the one I'm liking at right now. This is the fintech I believe I'm putting most of my thought process in. PaySafe, and then if Square ever gives me some better buying opportunities, I think Square would be the second in line for it. So these are the two definitely fintechs I'm keeping my eyes out at the moment. So let's take a quick look at Qualcomm. I know I kind of answered a few questions first, but Qualcomm right now, I'm really liking where the stock price is, right? I look at my 3-day time frame. Remember, technicals is the last thing I look at, but it kind of gives me a nice insight of, I know Qualcomm is already a strong company. We'll take a quick look at fundamentals. So first, I just want to make sure stock is not overextended. I mean, I want to say some strong support levels would be in like the mid 120s, right? We can definitely see this kind of level right here. Oops. I thought I clicked the wrong button. Alt H. So we can definitely see, right, this support. Oops. Around these levels, the 125. So I think these are super strong levels. Right now we're at 134. Maybe the stock price can drop a little bit more. But around these levels, I understand the volatility will continue. I'm liking Qualcomm at this level. So let's take a quick look at Simply Wall Street to see what's expected for Qualcomm. Let's see. So Qualcomm right now, this is a semiconductor. It is a very big market cap, right? $156 billion. Future growth, this is a company that's expected to grow 6.1% on average. I believe the growth is actually very low due to shortage. I believe this company can grow at probably stronger levels than 6.1% for the next 3 to 5 years. They are profitable. They are positive in cash flow from operations, right? So fundamentally in a strong place. If we take a look at financial health, they have about $13 billion in cash, about $16 billion in debt. So balance sheet, not the best. They are a bit leveraged, but remember, this is a company with positive earnings, with positive cash flow. So the balance sheet is okay because of that. This one also pays you a 2% dividend. So it's, for, in my opinion, it's forms like a growth and dividend play. Let's take a quick look at their website, right? Qualcomm, you guys might know them. Their chips, I believe they create a lot of ARM-based chips for the mobile processors, right? The Snapdragon is in a lot of mobile devices, especially in the higher tier, right? If you're looking for a nice gaming phone, it's most likely going to have a Snapdragon processor by Qualcomm. They are also kind of entering the CPU market in the mobile processors in laptops. I think later this year or early next year, I've done a few videos on Qualcomm So definitely check my catalog on Qualcomm. They are entering in laptop CPU processors, which I think is going to be pretty cool for sure. And they also have other kinds of technologies in the semiconductor for VR, AR, for Wi-Fi. So overall, the products that Qualcomm has, in my opinion, this is one that might not give you the best returns, but it's one that can give you steady returns over time. So one I'm definitely going to keep an eye out. Let me take a quick look at Qualcomm in their EV to EBITDA ratio. So let me take away PaySafe. Excuse me. So Qualcomm right now, these are levels EV to EBITDA ratio of about 12.84. I personally think that's pretty cheap. I mean, some of the big companies, right, like Microsoft, I believe they're in the 20s, in the 26. Right. So obviously, different companies, completely different markets. But I like to see how some of the big boys are doing right now in forms of EV to EBITDA. And this is actually current. I want to actually look at forward EV to EBITDA ratio. Yeah, so forward EV to EBITDA ratio 12.35 for Qualcomm, where like most of the big companies right now are in 23.91. We can see historically these are some cheaper levels that it's been. Obviously, there's been better buying opportunities. We've seen in those charts right here. These buying opportunities here in like the 120s, the mid 120s. I think Qualcomm, very good entry in those mid 120s, the way the market is going right now. Obviously, semiconductor shortage. Semiconductor shortage, it can affect the volatility in this stock price, but overall things are looking good. I wouldn't be angry if Qualcomm was in my portfolio. So I know that it probably took a little longer than expected, but Lisa and Peter, I hope that helped out a bit on it. Yeah, so Peter, the 125 seemed nice support for Qualcomm. I would go small around those levels. True, and for me as a trader, if I was a trader, the 125s is where I would open up a nice position. As a long-term investor, 135s, 125s is it's what like about 7%. If you believe the bullishness of this company, would you really risk 7% for not holding up on a company or for not entering a company? For me, as a long-term investor, I believe that percentage base in the long term of things is not that big of a gap, right? But definitely agree the 125s would be super attractive levels. Kenneth, what's going on, Kenneth? Thanks, Jose. Any thought on Asana? Let's take a quick look at Asana for sure, but let me answer Aaron real quick. Aaron, hi, Jose. Have you been keeping an eye on InMode since we chatted about it last? It's just been on a crazy run. Stock split announced. This is one that you've mentioned, right? And I believe, right, Aaron, and it's just been skyrocketing like crazy. Has it? Let's see. InMode, LTD. This has been a beast. Holy smokes. To be honest, Aaron, I haven't kept an eye on this one. I think it's mainly when you just show up and a bit and kind of talk about it. But this is actually a perfect example of why technical analysis as a long-term investor does not work, right? For me, I mentioned technicals are are the last things to really look at for me, right? Because for me, this is a stock that was overextended here, overextended here, overextended here. But look at the stock price now. So maybe as a trader, yes, you do have better buying opportunity. For me, it tells me, hey, there is a higher risk of it happening. But that's why I always say, for me, the best way is if I ever am bullish in a company, dollar cost average into it. Don't open up maybe with a big position. Maybe a small position to kind of get that FOMO out of it, and still be able to get some skin in the game. Because look, this can happen. This was a stock that if I would have looked at it in February 2021 and just on technicals, I would have been like, nah, I'm good. It's too overextended. I would have missed out on all these gains, right? So this is why a perfect prime example of why technicals as a long-term investor is not necessarily the first thing we should look at, right? And not necessarily the first thing, or not the first, because this is actually the first thing I looked at, but the first thing to determine if I should buy or not. I'd rather look at everything else from the business itself, from its fundamentals, and then determine, hey, is this the time to enter with a small position, or is this the time for me to go pretty heavy with the dollar cost averaging? Because of stocks like this, right? There are other stocks that in the long term will do this as well. Lisa, really love your live streams, but usually working, so can't chat. Always great info. Lisa, appreciate the support, and everybody else out here appreciate Um, so let's see what other stocks we have out here. We have Mazda, Ginkgo Bioworks Inc., and Soaring Eagle is now DNA. Oh, nice. Yeah. So Eagle, I forget who was talking. I think it was Maggie. I definitely a supporter of the channel, always talking about Eagle. So hopefully, SRNG is doing great. Not a market I follow. Definitely the Bioworks. Um, but this, I want to say SPACs right now are still kind of getting beat up a bit. Let's see if we can find it. Maybe is it gonna be still as SRNG or maybe Ink Go DNA Holdings? Oh, it's DNA. I mean, it's insane, right? This is it's definitely it's making a nice move. It seems. Not a company. Hey, Jose. Hope all is well with me. What's going on, Celty? Hope all is well with you as well. I really hope all is well with you as well. All is well with me. I'm pretty sure that's what you meant to say. Thank you, appreciate it. Definitely having a great time. I mean, it's Friday, end of the week, end of the stock market, right? It's definitely been it's definitely been a crazy week. I've had some issues with my equipment this week, but things seem to be going back into it. So yeah. But thank you guys. I mean, it's Friday. Is anybody buying anything today? I want to know. I did make some purchases today. For me this week, very small purchases, but it was PaySafe and Shopify were the two stocks I bought today. Very small positions, right? I'm not a loaded man just yet, but one day I'll be moving it. So Dave, oh yeah, you saw that. So what's your reasoning behind maxing out your Roth IRA with just an ETF rather than also adding some long-term growth stocks to that account? So Dave, that's actually pretty interesting. I mean, I don't want to say I have a reason, a real reason, except that ETF. I don't know if you take the look at it. Meta is pretty much. So Dave is asking, right? Every time I buy or sell a stock, I post it on my Discord channel, and I recently opened up a Roth IRA just because of some changes to my traditional working habits. So I'm like, okay, let me just open up a retirement account right now. So I recently opened up. So right now, any extra funds that I get, I kind of put them into this Roth IRA, and I'm just filling it up with one ETF at the moment, and that is Meta. And the reason is Meta, I believe, is the perfect ETF. If there was an ETF that was ever resembling my true style, it would be this one. So instead of just adding on, Dave, instead of kind of working on that portfolio, on that account, I think this would be exactly how I would be running it. I mean, it has companies like Nvidia, Microsoft, Roblox, Tencent, Unity, TWSM, Amazon, Autodesk, Qualcomm, C Limited. These are what 9, 14, about 19, 23, 28, 31, 35, 38. About 42% of the portfolio are from these top 10 holdings, and these are holdings, right? So a little bit less than half of the portfolio is made up by these top 10 holdings, and these are top 10 holdings that I really enjoy, Dave. So I feel like if I was to individually buy stocks in this account, it would resemble something like this. So that's the main reason with just an ETF. No other reason. It's just for me, it's a lot easier to just manage that account this way. Lisa, I wish I had some money. Hey, Lisa, I mean, we all do, right? But slowly and surely wins the race. MVI, so sale, MVIS, is that the one you want to take a look at, sale, or was it another typo? But Alec, Baba, Neil. All right, so Alec, sorry, my bad. So Alec, you had an interesting question, right? So, I've had my little baby 2 years account, 1,000 left in her account to be invested. I don't know what should I buy or just leave that fund. Her portfolio has C. So I have my little baby 2 years account, 1,000 left in her account to be invested. That's actually great. I mean, Salty, if I have no child at the moment, but anybody who has a kid, if you can open an account for them super early, yo, by the time they're 18, they're loaded. even with the small amount position, right? Let me just take a quick look at so investment calculator. And Ale, don't worry, I'll get back to you on that one. Investment calculator compound interest growth. So let's say initial investment. Let's say you start off with $1,000. I'm just curious, and let's say monthly contribution of something small. Let's say $25 every month. And length of time. Let's say you open it at 20, and let's say 25 years. Let's say you open it when they were just born. So length in time 25. Estimated 10. Let's just do 10%, which is usually not counting inflation. So let's calculate. So that $1,000, when you open up with 20 and you do a $25 monthly contribution, you would have about $40,000 in 25 years. That is insane. When overall contribution was about $8,500. Now let's say if you put that in $100 a month. I just really want to see how much things change. That's insane. About 128,000, and you only contributed 31,000. I mean, I feel if you're not investing right now, what's stopping you? It's like, and if you have kids, I mean, open up an account and just really start with even $100 a month, $25 a month. By the time, especially if they were just born and just $25 a month, you know, they would be so much happier in 25 years. That would be like the best Christmas gift. Or at 25, hey, for your Christmas, I'm giving you $40,000 at 25 years or whatever. But definitely, that's awesome. That's awesome, Celty. For me, if I was, let's say if I had a child, which I don't at the moment, and if I had that kind of money, I think I would honestly, Celty, I would more likely do just some form of ETF, overall market, and that's awesome, Celty. That is awesome. So, for me, I in all honesty, for something like that, I would probably prefer something like a ETF with companies I enjoy. For me, I think it would be a Meta ETF, but something like that, right? Maybe the Qs, maybe something more diverse. Obviously, I believe I'm a great stock picker, the best of all time. But I do believe sometimes, hey, I might not have time to track it. What if let's say God forbid something happens to me, and my child or somebody, the best way, I think that's what Warren Buffett does, right? I think Warren Buffett's for his family's accounts, it's pretty much just buy. Because at the end of the day, if anything ever happens to him, he knows that SPY would be like the only thing he would say. I forget where he wrote it. It would be like his suggestion, or not his suggestion, his advice would be just buy SPY. Like that would be the thing. Just because it's the easiest thing to manage, even when someone who knows about the market kind of goes away. But that's awesome, Celtic. That is great work. I definitely believe more parents should do that. I mean, it's crazy, right? I mean, you again, I mean, everybody does something, but I'm pretty sure a lot of these parents, and they all have a reason. Again, I'm not a parent, so I don't know that feeling of having a child. But spent hundreds and hundreds and thousands of dollars on like first birthday. Imagine if you would have put that hundreds and thousands of dollars instead of a birthday that they're not going to remember it. How about doing it in an investment account? And then at 25, you can, instead of giving them $1,000 first birthday, you gave them a $40,000 gift, right? I mean, obviously, there's just like anything, there's balance. I'm not saying never give your kid a birthday gift or anything like that, right? It's always the perfect balance, just like in anything in life. But I think that's awesome. That's awesome, Celty. Best of luck to you, and best of luck to your little one, Celty. And hopefully, in one way or another, I've helped somehow with those gains. That would be even more amazing. Greystone, I bought some Broadcom. Nice. So let's see. So David, actually, let's go back to Ale real quick. So Ale had an interesting question. Maybe you guys can kind of help out Ale. So Ale says, what can I do if I have, this is question. So what can I do with Alibaba if I have shares at double the current price? So first thing I would say, Ale, is this is what I would say. Maybe some of you guys can share something else. But what I would say is, sometimes we take losses, right? We take losses. We're never ever gonna bat 1,000, right? I mean, that's not the game we're playing. So first is understand this is a loss, and learn from it. What maybe some mistakes you might have made. Hey, maybe I went too big on a company like this. Maybe for future investments, I'll learn not to go certain big. Right. I'm not saying it's not going to go back to those prices, but I do think it's a great buying opportunity, and it's a great time to remember that, hey, we're not always going to bat 1,000 on this. For me, there's a lot of positions that I've lost a good amount of money. But what I've really learned is it's not my losers that make my portfolio, it's my winners, right? So my winners, I might have had some losses that gone down 20, 30%, but my winners, they have gone up over 100%. And those are the real portfolio movers. The second thing I would say is don't let the emotions of, hey, I have to make up these losses really move the market. I have to make up these losses. The worst thing you could do is sell off your position and try to put that money on like a meme stock and try to double your money, because what's going to end up happening is you're going to have your money again. So what I would normally do if I had a looser position and I didn't want to have it anymore, I don't think I would sell. What I would instead do is, as I put money to work in my portfolio, I would just buy other companies outside of Baba. So what that would do is my portfolio would grow bigger, but my position of Baba in forms of portfolio sizing would get smaller and smaller. So it wouldn't be it wouldn't affect my portfolio too much. So usually, if I'm not excited about the company, if I'm not, if I don't really care much about the company, I'll just let it sit there. Maybe I might sell, but I would rather focus my attention somewhere else. I get my learning lesson, but it's time to move on, because it's right, because Baba right now 159. I mean, market can move. Volatility works both ways, but this for me, the Chinese market is one I'm kind of standing away or more in the silence right now and seeing how that market is moving in the future. But at the moment, I'm really not adding too much Chinese exposure. So stock 77, thoughts on SoFi. New analyst price target at 28. Bark charter coming. I am loading up huge. I think this will 2x, 3x by 2022. What's going on, stock 77? Appreciate that. OJ, don't sell Baba. Hold it. I own it. Give it time. So yes, OJ, I very agree, right? So for me, it's very, very rare. Even if I don't like a position, for me to sell it. For me, it's just if I'm adding to my portfolio is getting bigger, I just add to other positions, and eventually Baba becomes more of like a minuscule thing where I don't really worry about it. But I think there has been some studies that usually you're better off holding on your stocks than selling them, because the way volatility works, you'll have better opportunities to sell or just things turn around. But yeah, obviously not advice. Baba is still a strong company, right? I don't see them going anywhere. I think right now you're seeing a lot of short-term volatility, but that volatility could definitely get worse. What I would definitely suggest is maybe if you are a little bit too excited or not excited, get too emotional with this volatility, maybe just not look at the portfolio for some time. So SoFi, let's take a look at stock 77. Thanks. Stock 77, thank you for the support. So first of all, SoFi, right? I think it was you that mentioned stock 77. SoFi is not a position I am bearish in. Definitely not. I like SoFi, right? They have huge growth. I actually just opened up a business account loan from SoFi. It was the place I was actually able to get the cheapest rate, and it was the easiest one to do. And I got funded within a few, I believe a few days after. I think it was 2 days after I completed all my paperwork. I got the I got my funds. So SoFi is, in my opinion, very easy to use. I'm now a customer. I've used it. I haven't bought the stock. And I don't think I have any intentions of buying, but that's because in the fintech market, I'm kind of looking elsewhere. I think SoFi is very strong at that user, that business to consumer, right? Your biggest customers are your consumers, for example, me, who are looking for loans. I'm looking more for a business to business type fintech market, and that's why I kind of went into PaySafe at the moment. SoFi at these levels, look at this. This is super volume, super volumes at these levels. I think SoFi, if I was really bullish in this market, this would be the time where I would just be loading the boat. Every week, if I was bullish, SoFi right now in the 15s, these are the times I would be buying. I mean, SoFi, we take a look at their most recent investors relations. Right, Q2, which they reported a month ago. Right, I mean, look, members grew 113% compared to the same time last year. Strong year-over-year growth, strong quarter-over-quarter growth. Products, same thing. Their Galileo accounts, right, also strong growth. Lending products, strong. We can see, right, quarterly adjusted net revenue up 74%. They are positive in adjusted EBITDA as well. So this is the fourth consecutive quarter of profitable adjusted EBITDA values. And I do believe that is going to be the case from now on. And for the full guidance, let's see, they gave us guidance for the full year. For the full year, they expect 58% guidance. They expect this to be the first full year of adjusted EBITDA margins. So for me, stock 77, SoFi is not a stock I would bet against. It's definitely going to be a volatile way, definitely a volatile market for sure. But like I said, I'm a customer of there. Yes, so Galileo is more business to business. Agree. But right now, I would say a good portion. For me, PaySafe is more of just true. Right now, I'm liking PaySafe. It's more of a true business to business to some extent. So yes, stocks. Galileo is more business to business. You're right in that point. Like I said, SoFi is definitely not a company that I would fight. Fundamentals look amazing at these levels. If I was bullish, is where I would definitely be buying on this stock. So just because I don't own a stock doesn't mean it's a bearish sentiment for me. Sometimes I'm just like, hey, maybe I just want to focus on something else. And like Super Koopa, my own thesis for me, and again, right, everybody has different thesis, everybody has different convictions. So for you, stocks, do you believe SoFi probably has the best return potential out of all these fintechs? I'm not saying you're wrong. For me, my conviction is elsewhere. And that's the great thing about investment, right? We both can have different positions. We both could win. And best of luck to SoFi. Definitely not a company I would bet against. Strong fundamentals, strong growth. I can see the stock price continue to go up. And Ali, hope it helped out the community. Hope they helped you out with some great answers. At the end of the day, Ali, right, it's more of a learning experience, and we have to remember that sometimes we get these losses, and we just got to learn from them. So stocks, if I may ask, how big of a position is SoFi for you? Are you really? Yes. So that's the thing, right? So definitely in two different markets, right? So for me, I think PaySafe, it's definitely not a growth story. PaySafe is, if we're taking a look at revenue growth, PaySafe is at a whole different level from SoFi. SoFi is growing at triple-digit growth, right? Where PaySafe itself, like you mentioned, is growing about 10%. So different stories, right? Different story markets. To me, the actual product is what's really differentiating me or kind of making me choose sides. I feel with SoFi, right? Yes, the lending platform, like I've used it for a business loan. We also have SoFi with everything else from trading to student loans to everything in that market, right? Everything that SoFi does. Let's take a quick look at SoFi.com. Hopefully I'm not logged in, but they do so much, right? SoFi Money, SoFi Credit Card, SoFi Relay, SoFi Invest, student loans, personal loans, home loans. They have so much, right? Definitely a huge growth, growing over 100%. To me, these are cool products. But for me personally, I think PaySafe's product of eCash solutions, the eCash solutions that they're doing in Latin America, for example, and the kind of payment processing they're working with the iGamification world, in the gambling world, in the casino world, and also in just the video game market, that to me are two products I would be a little bit more excited about then SoFi Money, then SoFi Credit Card, then SoFi Relay. Maybe they're not growing at the same levels, right? SoFi is growing at faster levels, but these are products I think, okay, they're cool products, But when I look at Paysafe's product, the eCash solutions in Latin America, the eCash solutions in Europe, the payment processification for cryptocurrency, the payments platforms for iGamification, for gaming. Like those are products I'm looking at, and I'm like, oh, these are products I really, really enjoy. I enjoy them a little bit more than I enjoy SoFi Money, and that's why I decided. Right, definitely different business avenues. SoFi, like you mentioned, growing at crazy levels of revenue, triple-digit revenue growth. So they're both in different stories, and I think it's just where an investor is more excited about. If you're more excited about the SoFi Money growth, if you're more excited about SoFi Invest and home loans, definitely SoFi is a bigger play. So even though they are in fintech, they're also, I want to say, hitting different markets. So for sure. Um, And Lisa, that's actually a great point, right? If you can't decide between Paysafe or SoFi, buy both of them, right? There's nothing that you can't do that. For sure. Greystone, do you know if fintech stocks will be affected if interest rates increase? I mean, you would expect, right? Especially, it depends on Greystone, right? On the fintech, if they do some form of capital lending, like SoFi credit card, maybe like personal loans, for sure, right? They definitely would. If they do something like maybe more like payment platforms, and payment platform solutions, maybe not as much, but maybe the overall market might just affect the volatility of that part of that market, right, Greystone? So just because in the fintech market, I think they might move due to the market volatility, but in forms of real changes, I think the ones that do some form of capital lending or some form of lending or free findings are the ones that are gonna be affected the most. So obviously, if interest rates goes up, I would see SoFi kind of doing good with like student loans, their personal loans, and home loans because they'll be able to collect more money through the interest. Rajesh, hey Jose, are you into crypto? So Rajesh, I'm learning into crypto. I wouldn't say I'm into it right now, but I'm definitely learning about the market. Still in very early stages. This is one that I want to take a lot of time of learning into. So, is there any other questions? What's going on, Louis? Louis, quick money. HLBS is running to 30. Keep buying, and end of the day will be green. RSI is pointing up. Best of luck to you, Louis. Louis, not my type of style, but again, hope the best comes to you and whoever's trading it. So let's take a quick look at stock tweets, guys. Let's see if anything is major, any changes in the market right now. What do we have right now? Um, So let's see. The interest rate effects will be wiped out by the boost. So actually, I mean, I would think interest rates would be bullish in stock in SoFi, right? Stock 77. Actually, would it? I mean, you have interest rates increase, so people who take out loans are gonna pay more on those interest rates towards you. So that means more money revenue for SoFi. But because interest rates are higher, it probably means less people are going to be taking out loans. So it's a double-edged sword, right? So it can actually go both ways, which I think is interesting. DNA is down 86.76%. What's going on here? Is it just... Did it just do a split or something? Or is it just the wrong ticker? This is actually not down 80%. StockTwit sometimes just gets it wrong. That is pretty weird. Oh, so someone mentioned Lucid, right? So what was the question on Lucid? David Doggy, yep, there you go. Hood and Baba will run hard today, William. Nice, William. Best of luck to you on those two positions. What are your thinkings about them, William? Why are you bullish on them for the day? So Lucid. I mean, Lucid, I want to say, is probably the closest the closest EV out there right now. I mean, they just came out with their EPA range, which was super amazing. Have they started delivering trucks? I mean, to me, if there was an EV startup or if there was an EV startup that I believe has the higher potential of succeeding, I think it would be Lucid. Compared to where the rest of the markets or where the startups are at, I think Lucid has a huge potential in succeeding. It doesn't mean it's gonna succeed, but it definitely has that huge potential. So Lucid and a lot of the EV market, I think, again, I could be wrong. I think it's still for me a very speculative play, right? I mean, I don't think you'll ever get the returns on Lucid like happened for early Tesla investors, and I feel like sometimes people want that hey, they want to get that 1,000, 2,000% that Tesla kind of give to early investors. I think many investors are already kind of expecting that, or a lot of that has already been kind of priced in. But definitely, if there was an EV market, an EV stock that I felt had the potential of succeeding, it would I wouldn't bet too much against Lucid. Right, they have EPA range numbers. I thought they were supposed to release vehicles at the end of this year. I don't know if that's still the timeline. Things like that are things I would keep an eye out for. But in forms of stock price, I mean, if I was bullish right now, would be times where I wouldn't mind kind of dollar cost averaging. Right, this is where it's pretty much been for the past 3-4 months right now. Hood is a triangle about to break out fully. Baba relief rally after China news settle. Lots of money managers will rebalance portfolio with more Baba. Nice, William. Thanks for sharing your thoughts. Appreciate that. Jeremy, any thoughts on ARKQQ? Which one's ARKQQ? I don't know ARKQQ. Quantum and Jose. Actually, OJ, I like your answer. Your question first. So ARKQQ, is this? It looks like a SPAC. I'm guessing it's a SPAC. Is it a SPAC? Not sure what the SPAC is. Jeremy, maybe you can give me a quick insight on the SPAC. But OJ, so you're asking what are my metaverse investments? I think my biggest metaverse investments right now would probably be Unity to start off with. Unity, I think, is going to be a software that is going to be used numerous times in the metaverse world. If we're talking about hardware, I think my closest one to hardware is actually Facebook. So Facebook is another one in my metaverse market. If we're taking a look at more the infrastructure behind it, it would be NVIDIA. It would be NVIDIA and AMD, OJ. So those are 4 I can think about right now. Google might be. I wouldn't be surprised if Google kind of makes it into that market. Then I want to say some offset to the metaverse. Metaverse is definitely going to need a lot of cybersecurity and stuff like that. So a lot of cybersecurity companies, I think, will do well as the metaverse kind of continues to grow. But I think and some form of financial services. So I have CrowdStrike, I have PayPal, and other fintech companies that I believe will also kind of benefit through there. But I want to say my 3 main plays in it, OJ, would be Facebook, would be NVIDIA, AMD. Actually, that's 3. And then it would also be Unity. Autodesk wouldn't be a bad play, in my opinion, for software for it as well. So those are the only ones I think I have right now. Maybe Microsoft might be a great play too, as they do focus on a lot of technological growth there, and they have stuff like the HoloLens and the mixed reality glasses right now. And then obviously to me some gaming companies would be pretty strong in there, but none of them have really shown true chase outside of Roblox. That's actually awesome. So Jeremy, this one's okay. So quantum encryption. Current encryptions are not 100% foolproof. It can be hacked. The time to hack, it depends on how fast the computer is. Given quantum computing is coming, the time spent to hack time encrypting will be cut short. That's awesome to know. Hence, ARKQQ is one of the first few companies in the quantum encryption. Even the founder of current encryption is on ARKQQ board of directors. Germany, this is actually a pretty cool one. So I'm not too much familiar with the cybersecurity market, but I can definitely see it, right? I can definitely see the market for it. I want to look at this one, Jeremy. I thank you. I do want to say right now, it seems like it's in early stages, for sure. It's in early stages for sure. So I think right now with prices it's at right now, it's just an overexcitement. So Jeremy, for me, this is more of a stock I'm gonna put on my watch list. I want to say there's a higher chance that I get a really a better buying opportunity than $17 for this one. So I'm gonna keep an eye on it, Jeremy. Maybe I might do a video on it, but appreciate the insight on this one. Very interesting for sure. OJ, do you think ATVI would be a player in the metaverse? Yes, for sure. I mean, playing World of Warcraft in the metaverse, screw that. Screw YouTube. That's what I would be doing all day. Right? I mean, imagine playing Call of Duty in the metaverse. I think gaming studios will get into it, but first it needs to be created, right? I mean, WoW to some extent is some form of a small version of the metaverse, right? MMORs, most massive multiplayer online role playing games, are kind of like a small fraction or a small portion of kind of like what the metaverse could be. But I think these gaming studios would rather wait for technology to advance. I mean, the metaverse, I do think this is something we're not going to see for another 10 plus years, in my opinion. I think we're going to be evolving throughout it, and we're going to see like little glimpses of it. I think we're still pretty early in it, but I do believe gaming studios like Activision will definitely be a player in that market. Um, and let's see. J Baldwin, coupon under 30 or L Pro under 40. I want to add next payday. Honestly, J Bald, I don't know. A coupon I know a bit. Not too excited about that or L Pro. So to me, I'm not sure which I would pick. If it was between those two, I think I would pick coupon because I know I'm familiar with it. But not advice. Remember, hey Jose, what's going on, Moriam? I'm doing good. How about you? So guys, it is coming to 12 o'clock here in the East Coast. I want to say thank you guys so much for showing up. I am gonna go and work on the video. Um, I don't know if I'll do a video Saturday or Sunday. I'm actually going camping for the weekend. Kind of go back and enjoy a little bit of the weekend. So I don't know if I'll have a video done ahead of time. But guys, thank you so much for the support. It means a lot. Stocks, appreciate the donation. I really mean it, Stocks. It helps out a lot. And everybody else, Jeremy, OJ, Moore, Neo, everybody, William, Lisa, everybody else, who Rajesh, Peter, all you guys, appreciate the support of you guys coming back. And come in and just hang out with me. I'll see you guys on Monday. Hope everybody has a good weekend and hope everybody has a great time with the family. So take care. I enjoyed finding you. Oh, nice, OJ. That's where you found me. That's actually pretty cool, OJ. Appreciate it. So take care, guys.